Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, September 16th. We just got the release of U.S. retail sales coming in at 0.7%. That beats the forecast of a contraction of 0.8% and the previous read of a negative print of 1.1. So pretty decent read for the dollar there, or for the U.S. economy there, rather. But good morning. Good to be with you guys this morning. Aurelian, Jay, Steve, Pike, everyone in the room, great to see you guys. Lots to discuss, okay? And there's lots going on. So we'll go over DXY, Euro, Kiwi, crude, dollar, yen, gold, Aussie dollar, sterling. I don't know what you guys are doing with sterling, but we'll go over it. Bitcoin, Ethereum, just a quick update on those, and we'll wrap it up with look at dollar CAD and what we're doing there. The dollar story continues. Okay, I told you last night, guys, that I bailed on that euro dollar position. I did actually jump in again and leave a little bit on there. So it's regrettably a quarter of the size I would typically be in, but looks pretty good. And we're heading towards 1750 on that front. We'll go over those levels in a moment. First things first, here's what the DXY looks like. So we published this back on the 14th. Again, the focus for the weekly chart has pretty been null and void. There's not much to look at here. From a weekly standpoint, we're basically looking for either resumption. The idea was for resumption off of support for the move higher, or break above that 25% parallel to mark resumption. So here's what it looks like on the daily chart. Okay, we're now at the 50% retracement of the decline off last month's high. Just higher is the 618 at 93. Now, the one thing that we talked about on Tuesday, and Monday for that matter, was the monthly opening ranges that remain intact pretty much across the board here. So you have your monthly opening range highs for euro right here. We haven't closed above it yet. The 50% is at 92.83 that's been governing the high. That's the break we need to see for the resumptive move. The opening range low for the month is right at support at the lower parallel, but we governed it at 92.30. That was our level. That was the 618 of the monthly range. And as we said early in the week, if it's going to hold, that's basically where we would want to see any type of losses be capped. This is exactly what we got a couple days ago here. So at resistance, okay? So if you're holding long dollar exposure on this stretch, okay, for retail sales coming in much better than expected, this is your first level of resistance. That was the 30-minute chart. I'm doing some internal price action studies there earlier today, but here's the 2-hour. Okay, so all things held constant, not only is it the monthly opening range high, it's also the weekly opening range highs. So looking for inflection into this region, right into the open of US trade today, we would need to see a breach to continue this upside thrust in the dollar. And if that happens, 93.05, 93.18 are just near-term targets on the upside. But we have to be objective and disciplined to where we are in price at the moment. So any questions on DXY? You do get some data tomorrow with with the Michigan sentiment. This is the preliminary read for September. So I'm not really expecting much, but we are expecting an uptick to 72 from 70. And this is just the sentiment index there. So we'll be looking at that tomorrow. Next week, and this is something I think that's going to start filtering into markets as you get deeper into the close of this week, is FOMC. You start off with the BOJ. You got the FOMC, then you got the BOE. So sort of central bank week here for yen, dollar, and sterling. I think you'll start to see some of that dwindling volatility simmer down as we get into that release. By the way, here's the VIX. Let me show you the daily chart. We saw that pop earlier. We're still rather elevated towards the upper bounds of the recent range we're in, with central bank on tap next week. So I am going to expect this to sort of start to dwindle down again as we get into the Fed. Questions on DXY? All right, let's jump into Euro. That was number one. Here's number two. Here's where I'm involved. So the setup for Euro, remember, looked like this. I gave you guys an update on this last night. So don't want to go over the weeklies again. You guys have seen this one before, but we talked about the 38.2 of the retracement off the highs for the euro, sort of being the cap that capped off the advance into the close of August. Here's the pullback. I thought we were going to get a little bit more back and forth, but the basic premise was to look for topside exhaustion. right? Bearish invalidation from the broader chart. Support on the weekly, critical support. So you've got a long ways to go. On the daily, here's euro. All right. So this bounce, and remember, we talked about this right on the back of the inflation read. You know, what did that mean? That the original inflation print, you know, initially saw dollar weakness. Then that dollar weakness quickly reversed. And that was the tell. For euro, it was a rejection of the median line and a pullback. And again, I was in a short there. I kind of bailed yesterday at 18. It sat there for a while. You know, is a fractional gain, whatever, but I didn't feel comfortable with the way it was acting. I bailed in it right before, you know, into the open of Asia. The thing started tanking again, so I just put a quarter on. So 1757 is the 618 of the drop. So that's a level I'm looking at right here, right now. Here's what it looks like on the scalp. Okay, and here's what it looked like last night. So the only thing I've added on here is the slope. If you take just the highs from last week and the highs from this week, a parallel off that low basically has yet support, converges, and further highlights this key zone. Okay, you might see my limit here actually hit any second. So I'm at 1750 for the limit, which is right in between the 100% extension, two equal legs off the high, a 618 retracement off the low, my favorite Fibonacci confluence regions. Both of those converge on basic channel support. So I am looking for a reaction right here today in euro dollar. Questions? I'll be watching this closely. If we don't get into 1750, US markets come online, we start to see some sort of recovery, I might just bail on it. We're already up 60 pips or so. If it doesn't, you know, we'll have to reassess what the bounce looks like. But right now, I'm looking for inflection into this 15, 20 pip zone as we open up US trade. All right. That is number 2. Number 3 from last night was Kiwi. And I wanted to give you an update on this because I updated this the day before, but I altered the slope a little bit. I didn't like the way that declined. Here was the previous update. Working with a real sharp pitchfork off the high, didn't really give us much inflection. And so kind of I defaulted back to the larger slope. And all it did was continue to highlight last week's open, which was key resistance, 71.51, a basic 236 to the drop, gave you 70, 60 something. And basically we're looking for a break at that opening range. That basic ideal hasn't changed yet. Here's Kiwi. Okay, now obviously you guys know this, my humble opinion, my bias is for the pullback. You know, obviously we're short on the swing side of things with Jamie, so that's our ideal scenario. All things held constant though, we're still in the weekly opening range. Here's your weekly open. You set a high, you test a low. We've been there ever since. So look for a decisive break below 70.80. I'm sorry, not 70.60. 70.80 is the 236. This right here. If we do see the downside break, again, 70.60s, 70.30, that's the bigger area. The basic monthly open, not Mike Boutros' opinion, not S&P's opinion, fact, basic 38.2 of the advance gives you 70.32 into 70.40, 8 pip zone right there. So that's my idea here with Kiwi. Looking at this objectively as possible, and this is what I kind of just wanted to throw out yesterday from the top down, we're basically just at trend resistance. Okay, here's the this is the yearly pitchfork off the high, low high for the year. Resistance, there it was yesterday and all month long. Right, so you would think that once you get a consolidation break of this zone, also defined by the 100-day moving average, which is catching support right into that 70-80, 70-70 level. If that were to break lower, again, your objective monthly open converges on last month's high day close. Beautiful level at 70.40. So I think the levels are super clear. For Kiwi, as it stands, we just need to clear this godforsaken range. All right. So no change on any of those levels for Kiwi. Looks like we might go for the break here. Questions? Okay, we got New Zealand dollar. That is number 3. Number 4, crude oil. So the oil charts have been pretty big. This was a major breakout in my opinion. It started off, we talked about this region for a couple of weeks now. It's the 618 retracement of the drop, former slope support, current slope resistance for the downtrend. It all converged right there on the weekly chart. Let me show you what it looks like now. All right. So downtrend resistance off the highs, former channel support off the lows. There was the buckle we were looking for, 618, excuse me, at 71. Here's the breach. Now, as it pertains to this chart on the weekly, we need to see a weekly close above this region. That is absolutely critical. If not, could be a washout like this, could be a washout like this, could be a washout like this. I could keep going. Okay, so that's just one thing you want to jot down in your notes to look at the close tomorrow. We want to see northbound close of 71.13. On the daily chart, it looks like this. Whoop. Okay, there's the 618, 71.13. I want to see that hold. The advance, using the wave structure here of the advance, gives you a 618 extension exactly at the highs we just made at 73.04. The high that we registered was 73.11. Okay, very, very clean stuff. So what do we go from here, Mike? What's your point? Well, could get a near-term kickback, bullish invalidation. The only thing that would turn you bearish would be a break below the monthly open, that 52-week moving average, or excuse me, that 100-day moving average, this zone right here. Here's the scalp. And here's what it looked like yesterday. Okay, so we didn't do much. The resistance held, and that was kind of the warning last night. This is the 618. It's also the May 18, 2018 high at 72.87 to 73.04. Again, we scratched just top, and here's the pullback. Could see near-term correction. Okay, if we take a retrace, I didn't want to keep it on here, but just for argument's sake, if we take a basic retracement from the low, a 236 gets you 70.40. Okay, and again, the monthly open is right at that September, is at that 38 too. So I don't want to keep this chart too complex here, but let's just clean this up with regards to the 50. We can probably drop that. Support, bullish invalidation. All right, so guys, feel free to take a snapshot. Oh, a quick reminder, there's a camera button on the top of the GoToWebinar screen. If you want to take a snapshot of any of the charts you see, guys, always feel free, obviously, but they're all for you there. But just a quick alteration to yesterday's slope, not the slope, but the lateral levels. If we are going to peak and give a near-term pullback, like I said, a basic 236 opens up 70.40, and that comes in line with basic channel support as well. So expecting a little bit of a pullback, but it's a constructive trade. Personally, not interested in trading the short. From my part, I'd be interested in the pullback giving me another long position. So if you are playing the short and you saw that bounce yesterday and you're like, okay, maybe it's worth it, just be nimble. Okay, your first level is still 71.13. That's key support. That's bullish invalidation. On the long side, the key level, by my part, is still 74.26, 74.90. This zone right here, still absolutely paramount. I know we scratched through it and ran there earlier in the year, but that is just such a critical level for me. Again, let me just take the weekly charts, guys. Just huge zone. Massive swing lows, massive swing highs, huge breakthroughs. So not out of the woods yet, but certainly looking constructive here on crude prices. Questions? That is number 4. Number 5 is dollar yen. And who knew dollar yen would finally make a move, but wait 1 second, it's taking it all back again. So here we are. This is why dollar yen has affectionately earned its name, the abomination. We have done it again. The break below 109.65, what is it? 109.67 is the level we've been talking about for a couple of months. Huge region was the monthly opening range low. We broke below it yesterday and plunged, turned just pips from the 618 retracement right back at that major pivot. This needs to hold resistance right now, like literally right now. Otherwise, it's just a complete nullified false break scenario. So let me take you back to the weekly charts for a moment. The place where we bounced is the problem because it puts you right back in range bound condition. And here's the weekly chart. Again, guys, you can't make this stuff up, okay? Look at that circle there. That was there before that drop just materialized. And that's exactly where dollar yen just bottomed. So if we take a look at the levels, I believe it was here, okay? There was what we were looking for. There was 109.68. And we even warned, is this break legit or not? If this is a legit break, then the downside move should be looking for that move towards, what was it, 109.07? Again, the weekly chart, right? Daily chart, 109.07 on the mark. What was the low registered at 109.11? And then here we are back on the move. You have to be nimble with this one, guys. It just rips retail traders apart. So here's what it looks like on the intraday, guys. I mean, it's just too clean. I haven't taken any exposure on this, regrettably. Honestly, the break of the weekly opening range, the break of the consolidation low was actually a pretty clear-cut move with a stop against the high. You had a nice range. But from here, boom, right into the low, right back at resistance. This is the monthly opening range low. If this is going to hold, we don't want to see anything past the weekly open. This 109.87, that's what I told you guys yesterday. That's got to hold if this break is legit. If we break back above, I chalk this up to a false break scenario, and you're right back in the range. You're not necessarily bullish, but you're right back in the range. Okay, so boy, oh boy. Hope someone caught that of you guys caught that dollar yen drop today or this week, but coming off support, look for exhaustion over the next 2 days into 109.87 if this is going to continue to head lower. Questions on dollar yen? Retail sales could charge this a little bit tomorrow. Keep in mind the Fed is on tap next week. Again, everyone's been talking about what's been going on with stocks. A real quick show of sentiment. I mean, this is the yields on the 10-year starting to get a little messy, right? So we were talking earlier in the week how literally yesterday's, or was this Tuesday's candle came right off the median line, slammed right back into lateral support. We've been watching 127.90 for months. That's just a former swing high from back there in 2020, March. And then yesterday's reversal again with a bounce. So look, I think you see some more lateral movement here, some more consolidation. At the end of the day, resistance hadn't changed. It's still 137.50 at that 38.2. We probed above it a couple times, but never closed. And that's what we're focused on in the days ahead. So until that clears, you're basically still in this contractionary zone just below resistance. So quick fix there on yields. Okay, let's go back to gold. Talk about fake outs. Was gold another fake out as well? So I'm not gonna lie, I thought the gold was gonna be, or the gold pullback was something that we were focused on as soon as we saw this fake breakout. Remember this? 1827, we talked about it the last couple of weeks. That was a huge level. 618 at the drop off the high, 52-week moving average, downtrend resistance, and we did close above it technically, but just by a hair. The high ranges from July and August held. Here was the reversal last week, which slammed us lower, outside reversal off the high, super bearish. Looking to see if the bounce gets back, didn't give much, held at the parallel. Here we are. back at support. 1755 is going to be a pivot we've been watching since back here in March. Again, don't take my word for anything. Just look at it, right? So you want to see some sort of inflection there on the downside. This is from the weekly chart. Daily chart looks like this. Open of the month, right into the range highs again from July, August. Failure, there's the turn and break lower. Here's the 2012 high pivot, 1795. You saw that held resistance again to the start of the week. It was looking for exhaustion to 1815. We never got it. The high was 1808, okay? And then it turned lower. So 1774 broken. If closed today, keeps the focus on 1750 and 1738, which would be a 618 of the advance off the August rally. Quick drop here. Further fuel for possible support in the dollar. Here's what it looks like on the intraday. Pretty dramatic drop today. Okay, the retail sales number, they charged some sort of move. So here's what it looks like, or here's what it looked like last on gold. This was our update on the 14th. We noted, hey, the breakout's at resistance. 1805 is right here. The breakout level will be 1814. That's where we would need to suggest, okay, we're back on the resumptive move. That ended up being the high. Here it is, literally. Tested. Again, an outside reversal candle yesterday, slammed it lower. Here's a break of the objective weekly opening range lows. Has you looking for a Thursday, Friday low. At this point, the only thing you're looking for, 1755, 1750. It's the 100% extension and the June low. Both levels of interest right now as we head into the lower parallel of this slope. Here's a 2-hour chart. Questions on crude? It's a break, plain and simple. Plain and simple. Looking for inflection on a move lower towards 1755 initially, but really the June low should cap it if it's going to stay within the confines of this slope here. So that is gold prices. Okay. 5, 6, and this is number 7. All right. Aussie dollar, number 8. So look, you guys, I've told you about this trade a couple times already this week. You know, I haven't gotten anything new, unfortunately. Last week we were in the short, bailed early. I was kind of looking for a reset early into this week. Didn't really quite get it. I mean, the opportunity was there. I just didn't get the entry, guys. But if you are holding it, at this point, you want to just choke up your stop to 73.36 or above, right? As long as we stay into this range, the onus is really on the bulls to try to refute this. You're breaking major support. Here's Aussie on the weekly charts. We've talked about 73.28 for a while. Last month's open, the low from the 2017 May drop, major inflection in price. We ripped on both sides, on the drop and the rally, with support last week. Looks like we're making another break here. If we are, the 618 comes in at 72.48. It's like another 80 pips. So from a weekly standpoint, watch the close with respect to 73.28. If we close below, I think you slide. Here's Aussie on the daily chart. Again, rejection at major. That was the beautiful resistance. That was the trade for me last week. Again, bounced early. Here's what seems to be the possible makings of an outside reversal candle. Watch today's close. If it is, it would actually tend to scare me because I want to see these outside reversal candles at the highs. Okay, something like this, where the outside reversal kind of takes you into trend, right? Something like this, outside reversal takes you into trend. If an outside reversal materializes at the bottom of the latest swing here, those tend to concern me because they can be exhaustive, actually. It's not sort of the resumption move. A lot of times that outside reversal can be sort of the blow off, right? And then a rally. So I'm a little hesitant to say the least. But look, at the end of the day, I'm going to be objective. Here's the monthly range open. Here's the monthly opening range lows. Okay. At the end of the day, if this breaks, sayonara. 72.81, 72.48 is going to be a nice clean 618 of the advance off the high. So nice region there. Also, not to get too granular, but if you take a extension off the initial wave count of the swing high there, look where the 100 comes in. 72.70. So right in line with that level that we were looking at anyway. 72.80, 72.76, initial target. If we break, secondary targets, that's 618. So no change to any of those levels. The only thing I did was just add that 100. But clean channel, still in play. Looks like we're breaking lateral support. Questions on Aussie dollar? All right, British pound. I don't know how many of you are trading sterling. If you are, good for you. I haven't been able to get a fix on this one, although I do have this just at resistance. The resistance bounces have been futile. The monthly opening range is tight. Hell, the weekly opening range is tight, excuse me, and is still in play. Let me show you real quick. Here's sterling on the weekly charts. You can't make this stuff up. It's been really struggle to get this thing just moving. Here's what the update looked like on the 13th, guys. It's the same level. Here's the weekly chart. It's the same level we talked about into the start of the week. You know, we probed above it, even probed above last week's high, but here we are back below. Again, on the weekly chart, it needs to break for it to matter. Never did. Here's the daily chart as we struggle at that confluence region. Again, the 100% extension, the 618 retracement, very nice confluence zone right there on the daily chart. And you can see this week, not one daily close above. So every time this thing tried to rip, we failed right there. Obviously, that was halted at slope last week. Or was that the week before? But you get the picture. So what do we do from here? Well, if this does materialize to be a break of the weekly opening range, objectively, you'd be looking for a drop into the monthly open. Those dots there at 37.54. On the intraday chart, one other thing I'd want to show is look at momentum. For those guys who are calling for this could be the big sterling breakout trade, from a momentum study, the discipline would suggest that the oscillator is still in a bearish formation. We have not seen a 60 break yet since the highs that we made, that we registered for the year back in May. So the onus, again, is on the bulls to try to clear the way. I think your uptrend is at risk if we break the objective swing lows for the week, which would be a break of slope support or channel support. Again, 37.54, 37.12, just near-term objective targets. I was trying to figure a slope on this earlier today, trying to get some sort of beat on what the possible slope is, the possible formation. There's just nothing here for me. Cautiously bearish. If we get a move lower, look for 37 to give you some sort of tell. Low conviction trade. Low conviction trade. If the August open rips at 38.90, last week's high, that's the objective range highs for the month, then you're just looking for 39.90. You're looking for 140 basically. So it's such a key resistance zone that's kind of the reason I'm looking against it. Not counter trend per se, because we've been in the rally. I mean, we can kind of even scratch this at this point, but just because we are at big lateral resistance on the weekly, slope resistance on the daily, fib resistance on the intraday, weekly opening range is preserved. All right, that is number 9. Let me hit dollar CAD real quick, and then we'll just go over briefly the cryptos if you guys are looking at that. Here's what Loonie looks like at this point. So Another trade that we've been following closely, here's what it looked like into the start of the week. We had just rebounded off of big support. If you guys recall, this was our sort of target last week. Here was the update back on the 2nd of the month. We were looking for that pullback to give us some sort of low into this region, right? What ended up happening is we pierced, whoops. What happened was we pierced right below it, and then we rebounded into, and this is where we were as we opened up US trade session today, or this week. So it's the same range. It's the same trade that you're looking at with Aussie. I guess even more so with sterling, in that the weekly opening range is preserved. Here's your weekly open. You set it right below the yearly open. You set it right above support. So for these trades, guys, I'm not making any longer term assumptions. If you're trading them, you're playing within the range. If you have to be stanced or you're trying to take a position on the longer term, again, personally, by my part, I'd like to see dollar CAD move higher. So I'd rather be buying pullbacks near support, looking for the 27.13 breakout and the close to mark resumption. That's what we need to clear to get another run on 28.22. So respect the weekly opening range break here. I don't have much insight for you guys as far as dollar CAD is concerned. It's been one of those trades where you haven't really been able to make a directional break this week. Even this looked like it was going to be a break of the weekly range highs yesterday. Failed. Still holding support, still holding support. We'll let this one settle out for a while before taking a stance on it. Questions on dollar CAD? All right. Quick look at the crypto block. I've been just mesmerized by this because I'm getting yeah, I just get calls from all kinds of other guys on desks in the city, reporters, all these news headlines. They just want to know, well, what's the deal with Bitcoin on this move? Look, from a technical standpoint, it is still pretty clean. Here's the daily chart for Bitcoin. We're not out of the woods yet, okay? We just rebounded off of uptrend support. Again, you can't make this up. It's so ridiculously clean. Intraday looks wicked. On the close, looks rock solid, right? Now we pivoted back above the accursed 200-day moving average that everyone keeps talking about. We're back above the monthly open. So the immediate downside pressure has exhausted, in my humble opinion. And just to go to the example we were talking about earlier about the outside reversal candle at the lows. Here's an example of one. That ended up being an exhaustion print. You want to see another one? Here's another example one. On the pullback, you got an outside reversal candle lower. That ended up being the exhaustion before you rebounded. So these things tend to catch my attention, and they tend to be a red flag, right? So that's all to say. At this point, resistance 49,114 is a 618 of the drop. I still think you could drift a little higher. Near-term support at the monthly open, which is basically taking you right into 47,000. At this point, a buckle back to 200 on the slope standpoint is what you would need to mark or risk another spill lower. So Jay, I don't really follow this on the weekly chart. It's a good question you have. Here's what the intraday chart looks like. I'm going to look at it in a second because you asked. Here's the intraday chart, guys. So again, the weekly ranges looks like it's broken to the upside. So 49, there it is, 49,114 to 49.5. This would actually be 100 off the low. So if this is corrective, well, I guess you actually have to drop that down to here now. Oh, look at that. Stop traffic. Well, that's interesting. Drop that down, guys. I forgot to take account to that new low that we made. 48,463 ends up being the 100 off the low post crash. That's interesting. That's interesting. Again, 51,030, which was the level we've been talking about literally for like 5 months. That's still going to be a level of interest for me. I know we buckled above it last week before that tumble, but that's still going to be the most comprehensive sort of breakout level in my mind for Bitcoin. But watch this resistance zone here, right on this stretch. I think it might be a little tired here as we open up. So Jay, let me take your question there on the weekly chart. Okay, let's see what it looks. So on the weekly chart, last week's outside reversal candle was off the high. Again, those tend to be your winner signals, Jay, right? The last time we saw outside weekly reversals off the high was here. That gave you a drop of what? 30%. Privy to that was here, the actual high. That gave you a drop of, this thing just sometimes doesn't want to click with me. Anyway, gave you the whole drop. I think that was that was like a 60% drop. Outside reversal, that wasn't it. So just off of that account, it still gives you the risk for the pullback, right? But the 38.2, you haven't broken slope support. You rebounded off it. Even on the weekly chart, looks like you're holding that. I'd be cautious. I'd be cautious, Jay. Because again, while this whole debacle price action does look corrective, if you put a pistol to my head and I wasn't even looking at the asset, I would say look for a rally to sell for a new low. But it's a little bit of different of an animal. So I think you could still get a little bit higher from here before you start to actually have to make that decision on whether this high is more important or not. Jay, does that make sense? He says, yes, thanks. All right, cool. Ether, not quite as granular on it, but I just did want to highlight that 618 we talked about on Monday's webinar, I guess in Tuesday's webinar, we closed a pip above this yesterday, and then here we are with the exhaustive move. So is that 618 broken or not? I don't know. Watch the close today. Both of these are moving lockstep, guys. If Bitcoin breaks out, it's going to be so be it in Ether. As it stands right now, the next lateral level of importance for me is the high day close for the year at 38.58. That's the high day close. It was an outside reversal close we made back here in May. So not as clean, but on both of these, you're basically looking for possible topside exhaustion on the near term for this recent rally. He says, I'll be careful too. Yeah, please do. It's been clean moves on these, surprisingly. At the end of the day, the one single day washout is the range you need to clear. That's so critical. This is all noise in between. Okay, so if there are no other questions, well, if you have any questions, feel free to throw them on the message board. If not, we'll go ahead and wrap things up here. Looks like Euro is going to trigger that 1750 limit. Let's see how that works. We're at 1753 here as we head into the US Open in just a couple of minutes. Stay nimble into the close of the week. Again, Fed is on tap next week, guys. Now is not the time to be FOMO. If you've missed any of these position moves, we're going to get some decent volatility. It's going to start to ease, though, as you get closer to Fed. So we don't want to start chasing this from here. Abridged version of our schedule next week. I'm going to be live on Daily Effects on Monday and Wednesday for the midweek webinar. I'll do a webinar here with you guys on Tuesday. And then Thursday, we got some more baby stuff to check out. So I won't be here then, but we'll keep you guys updated on SB Squawk. Like I said, keep it light into the end of the week, guys. Watch this dollar move. I'm loving it. And more importantly, that tomorrow, I'll be really interested to see how dollar yen responds as we get into those retail sales numbers, see if that pushes it around at all, so we can get some clarity on whether this break is legit or whether we're just going to go right back into the monthly open here. All right, guys, I'll leave you there. Have an awesome week. Best of luck trading. Same to you, Jay, Steve, Aurelian. Have an awesome weekend, guys. I will see you on Monday. Cheers.